What's up, fam? It's Jay Lobos coming back to you on another episode. And today I wanted to talk to my entrepreneurs, my business owners out there who are looking to get some sort of funding. You're looking to maybe expand the business. You're looking for financing. And guess what? You've been told that you could build business credit without a personal guarantee. And I wanted to go ahead and just dive into what that actually means. And also the importance of leveraging your personal credit when doing or submitting any applications. So let's go ahead and get started today. For you guys out there checking out the channel for the first time, consider liking, subscribing, comment, and share if you found this to be really educational. Now, I wanted to go into what is really a personal guarantee. And we obviously hear this a lot when it comes to business. I've spoken about this when it comes to having double the buying power, limiting the amount of risk that you have. And really what a personal guarantee is, when you go ahead and you sign off some sort of business loan, it really means that, guess what? You're going to need two things. You have a borrower, which is the business, and you also have the guarantor, which in this particular case is the individual. Technically, a business is owned by an individual, and for the most part, any lender is going to want to hold responsible, not the business to an extent. Again, this is through the development process of it, because when a business is first, from the inception aspect of it, there's really nothing on that business. So if you've had the experience of going into a dealership, or you maybe went online and you wanted to apply for that business credit card, most likely they're going to ask you for your social. The reason for that is because, again, you need to personally guarantee that you're going to make those payments. That's really their main concern. And when you first start off building business credit, people talk about, which I've also said in the past, you don't need a personal guarantee. And why is that? Well, this depends on the type of loan that you're applying for. Example, if right now you're starting off, you're building your credibility aspect of your business, because keep in mind, in business credit, it didn't work like personal, where you went into a bank, you went into a dealership, or you maybe applied for a credit card online, where guess what? You could have gone ahead and applied for an account on the personal aspect of it, and all that information under the Fair Credit Reporting Act, that creditor had to report, had to open up a profile. So it's really done seamless from an extent when it comes to a consumer standpoint. If you got approved, fantastic. And that means that obviously it should have a positive impact on your scores. But if you did get declined, it would be some sort of adverse effect on your credit scores. Now, on the business, it doesn't work like that. So like I've said before, and check out my past videos, where depending on how you structure the business, if you've created the credibility aspect of it, you've gone through the corporate address, corporate phone number, corporate email, the domain, the website, you've gathered all that info and you've already structured that information through Dun & Bradstreet, through Experian Business or Equifax Business. Now you have a shell. So starter accounts usually don't require a personal guarantee versus a more advanced account like a car loan, or maybe a business credit card, a Visa, a MasterCard, an American Express, or maybe if you're even looking to acquire a building or even a house under the business. If that business is not structured correctly, it doesn't have enough weight, it doesn't have enough accounts lined up, there's not enough history, you are going to require to go ahead and use your personal social. And what happens then is, which I've always spoken to people about, even if you have to go ahead and use your social, and they're going to have to verify that you also have good credit, because the business is not self-sustaining. It doesn't have the scores that it needs, or it doesn't have the information that it should have in order for it to stand alone. Then you're going to have to use your information. What happens is that the information, once it's used, it doesn't mean that the car is going to reflect on your personal credit, or that the business credit card is going to come onto your personal credit, with the exception of some companies out there like Capital One, the Sparks. That one actually doesn't report to the bureaus. And for that one, you will need your social, and it will report on your personal credit. But when we talk about personal guarantee, there's really nothing bad about that. And I've always said this in the past. Guess what? You could have double the buying power by not only having a good business credit profile, something structured, something that has scores. You obviously have all the accounts, but you also have personal good credit. Why? Because when you get into those advanced accounts, or even advanced lines of credits or loans, what I'm referring, even when you're talking to the SBA, guess what? You're going to need a good personal credit score, minimum 680. Depending on the type of loan that you're going for, they would want even a 700, 720. And they're going to also take into account your business credit score. That through Experian, it should be a minimum of an 80. Anything above a 65 technically is good, but you want to secure the bag by having an 80. The two scores together, guess what? That's going to give you a blended score, minimum of a 175, that puts you to be eligible for certain products. But guess what? Every bank works different. If you walk into an institution like a Bank of America or a Chase, you're going to have to create a personal profile. So depending on what you're applying for, personal guarantees they vary. So starter accounts, like let's say a Quills or a Uline, a Granger, a Marathon, a Valero, those type of accounts, they might not take your credit, or they might not even have to look at your credit scores in order for them to make a determination. But again, personal guarantees, let's not shy away from that. Let's maximize on having two great credit scores. A business credit score and a personal credit score. It's what I've always said in the past, even to my peoples. Guess what? If there's 100 options, let's not limit our options to 20 because we don't have something. And that's really the whole objective. If there's 100 lenders out there that are looking to go ahead and give you funding, looking for financing, because you don't have something specific, you didn't have a personal score, or maybe you didn't go through the application process of getting started with some starter accounts, you might limit yourself by not being approved for those 100 things. The whole objective here, let's cross our T's, let's dot our I's. Let's make sure that we build the profiles the way it should be so you maximize your opportunities. Guys, I hope this was fruitful, and until the next time, thank you so much for the love and support.